Hello, students. I hope all are preparing for coming accountancy exam, final exam. Anyway, all the best for your exam. So today I am planning to discuss how to deal with admission of the partner. You know that almost 35 mark question will be coming from partnership accounts. So among that partnership accounts, admission of the partner is the one of the important chapter. Almost 10 to 15 mark question will be coming from admission of partner. Okay. So if you understood admission of partner, then the following lessons will be very easy, like retirement and death of the partner. Even dissolution also will be very easy if you understood properly admission of partners. Okay. So many students requested me, sir, can you explain admission of a partner, because we are not able to understand properly. Many concepts are there in admission of partner. So today I am going to discuss how to deal with admission of partner in a practical way, completely practical way. Okay. So all the lesson will be discussing today itself in this single video, and I'll be discussing including capital adjustment, all the capital adjustment. Okay. So please listen carefully. So I'll be discussing admission of partner in a very practical way. We can just start a business, the business which is very familiar to you. Like we can start with an ice cream factory. So let me explain what is the definition of an admission of partner. What is meant by admission of partner? Actually, what is meant by admission of partner? A new partner is coming to your business. Okay, or a new partner, you are going to admit a new partner to your business. Because of that, the old partners will be sacrificing their shares to the new partner. Okay, so obviously the old partners will be giving a portion of their share. Either it can be equally or in a different proportion will be giving to the new partner. Okay, so the new partner want to bring proportion amount of capital or amount of capital and some amount of goodwill also. Okay, so let me explain how to deal with admission of partner in a practical way, very practical way. So first of all, I will be explaining how the questions are coming, how questions can be, what is the reason behind the question, how question can be developed in admission of the partner. Okay. So now, first point, I just want to explain what is the need of admission of the partner. Why we need to admit a partner? The first reason is maybe we need more additional capital. Need of additional capital, right? We need more additional capital, additional capital. We may need more additional capital, or why we need additional capital? Because we want to expand our business. Okay. Or another reason can be, another possible reason can be, we need some special skill from some persons. Suppose imagine one partner is having, one person is having heavy skill in a particular area. So if that person is coming to our business, obviously our business will be developing. So that can be also another reason for admitting a new partner. Okay, so this is the main two reason why we are going to admit a new partner. Okay, so now let's take an example of a business. We can start an ice cream factory. So our business is an ice cream factory. You already know what is my ice cream factory. So ice creams will be manufactured and sold in ice cream factory. So I'm just going to draw a balance sheet for an ice cream factory. Normally what kind of items will be there in an ice cream factory? Maybe some machineries will be there for manufacturing the ice cream. Maybe some furniture will be there. Maybe some debtors also will be there. Because many customers will be taking ice cream from our factory and they will be giving the money afterwards only. So there will be some debtors. Building also will be there. So normally, what kind of asset will be coming in an ice cream factory. Okay, so now we can take two partners. Imagine that A and B are the partners. A and B are partners sharing profit and losses. They are sharing profit and losses in the ratio of 3:2. They are sharing profit and losses in the ratio of 3:2, and I am just drawing a balance sheet for them, a small balance sheet for them. So why I am drawing this balance sheet and everything, then you are able to understand what is the reason behind this question, how this question formed. So then it will be very easy to understand how to do revaluation account, how to do revaluation account and everything. Then it will be very easy to understand how to do revaluation account and everything. Revaluation account, partners capital account, cash book and balance sheet of reconstituted firm after admission. Okay, so I'm just going to explain. Just going to explain how the question came. Okay, so I'm just drawing on balance sheet, liability side. Liability side, amount is the asset amount. Okay, so I'm just recording some items. So in our ice cream factory, there is a cash balance of 20,000. There is a cash balance of 20,000. There's a cash balance of 20,000. 20,000, and there is a building for keeping all the ice cream. There is a building for keeping all the ice cream. The value is 13,000 on 3,000, and there is a machinery. You know what is the importance of machinery in ice cream factory? Definitely we want to mix the ice cream, and there are many process will be there, and big refrigerators will be there in business in ice cream factory. So this all we can include in machinery. Okay, so machinery value rupees 20,000. We have a machinery of 20,000, and there is a furniture. There is a furniture value rupees 5,000. Maybe small furniture, it will be 5,000, and there is a goodwill also. I'm just adding goodwill, so we can understand how to deal with goodwill also. Okay, 4,000 rupees, and sundry debtors. 30,000 is there. 13,000 on 3,000, less there is a provision for doubtful debt. Provision for doubtful debt 3,000. So inside you can see 10,000 balance. Okay, 10,000. The total asset will be 72,000. 72,000. This is the total asset. Okay, now we can mark the item what is there in liability side. Okay, so obviously capital will be there. So there are two partners. Who are the two partners? A and B. So A is holding 25,000 rupees in the form of capital, and B is holding 20,000 rupees in the form of capital. So total 45,000 is the total capital. 45,000 is the total capital, and one general reserve is there. One general reserve is there. 5,000 rupees. General reserve is 5,000 rupees, and workman compensation fund. Workman compensation fund. Workman compensation fund. There is a workman compensation fund. Okay, there is a workman compensation fund of rupees 20,000. Of rupees 20,000. The last item, sundry creditors. Sundry creditors rupees 2,000. Rupees 2,000. Total 72,000. Okay, total 72,000. Okay, so now what is going to happen? This is the balance sheet of our ice cream factory. Now what they are going to do? They have decided to admit a new partner. Okay, we can we can name that new partner as C, Mr. C. So they admitted Mr. C as a new partner. They admitted Mr. C as a new partner. Mr. C as a new partner. Okay, new partner with a capital. They admitted Mr. C as a new partner for 1/4 share. Okay, 1/4 is their share. 1/4 share with a capital of rupees 20,000, and goodwill of rupees 5,000. Okay, so they admitted Mr. C as a new partner, and he want to bring 20,000 as capital and 5,000 as goodwill. You know that what is by goodwill. So till today, who is running that ice cream factory? Mr. A and B is running ice cream factory, right? So obviously they struggled a lot in their life. So obviously if the new partner is coming to your business, this new partner want to give an extra amount, that is called goodwill. as a remuneration or whatever it may be. It can be given in personally also, it's okay. There are different cases of goodwill, how to deal with goodwill. It can be given as personally, so nothing will be coming in accounts. So whatever it may be, goodwill should be given. The reason is, till today Mr. A and B are the partners, the old partners. Because of their struggle only, this business is going to become, already became a profitable business. Okay, so obviously the new partner want to give an extra amount. Okay, the new partner want to give an extra amount, that is called goodwill. Okay, so now another case is, now anyway, we got a goodwill of 5,000. Another case is, the new partner is coming today onwards. Okay, so the new partner is admitted today only. So till today the old partners are running that business. And you know that there are many assets and liabilities in our business. I already told you, there are some building, machinery, furniture, goodwill, many assets are there, and liabilities also there, and many reserves also there. Okay, there are many assets and liabilities in our business. Till today the old partners, Mr. A and B, is working their business. So whatever extra benefit generated in that asset will be, that benefit will be taken by the old partners in their profit sharing ratio, that is 3:2. Okay, so what is the reason behind that? Because today only new partner came, just today only new partner came. So if any extra benefit generated in business, we don't want to give to the new partner. Okay, we don't want to give to the new partner. That extra benefit the old partners will be taking through revaluation account. That is the purpose of revaluation account. Now we are, after this question, we are going to do first account is revaluation account. So what is the purpose of revaluation account? So whatever profit generated in business, whatever profit generated in business till today, or whatever appreciation or depreciation happen in present assets till today, will be taken by the old partners in their profit sharing ratio. Okay, in their profit sharing ratio. Okay, so now for that purpose, we can just invite a broker for evaluating all the present asset in our business. We can just find any appreciation or depreciation happen in our business or not, we can just find. Okay, so for that purpose we can hire any broker or someone. So the old partners will be going to the second hand market and or revaluation market or outside, and they will find what is the present value of that particular asset, whether it is increased or decreased, they will find. Okay, how they are going to find? They will be taking a broker, and they will be going outside, and they will find what is the present value of the assets and liabilities in our business. Okay, so if any appreciation is there, they will never give to the new partner. What is the reason? Because he is coming from today onwards. They will be taking that amount through revaluation. Okay, so that is the purpose of revaluation account. Okay, so now I am writing as a first adjustment. We can take machinery into second hand market. Okay, so what is the present value of machinery in balance sheet? You already know the present value of machinery is 20,000. Present value of machinery is 20,000 in balance sheet, you can see. Okay, so machinery, while taking that machinery, while we inspected what is the present value of machinery in second hand market. Sorry, the old value of machinery is 20,000. So we just inspected what is the present value of machinery in second hand market. We found that machinery is increased up to 25,000. So the machinery was revalued at rupees 25,000. So I am writing that adjustment here. Okay, so machinery was revalued. The machinery was revalued at rupees 25,000. So the value of machinery is 25,000 now. Okay, so what is the value of machinery now? 25,000. What is the old value of machinery at the time of purchase? It is 20,000. So 5,000 increase it. We don't want to give that 5,000 to new partner because he is coming today onwards. We can give to the old partners through revaluation account, that I am going to discuss after this question. Okay, so now second adjustment, I am just taking a second adjustment. Now furniture is there in our business, you know that furniture is there. So the old value of furniture is 5,000. The furniture was revalued. So we found that the value of furniture in second hand market, furniture was revalued. Furniture was revalued at rupees 3,000. The value of furniture become 3,000. That means decrease it. Before it was 5,000, you already know. Before it was 5,000. Now it decreased to 3,000. What is the reason? The value reduced in market. Okay. Or the present value of furniture is 3,000. That means 2,000 reduced. That loss also will be taken by the old partners. The new partner don't want to suffer even loss, even profit also. Both loss and profit. Okay. So furniture is valued at rupees 3,000. Now third one, uh, there is a building, for machinery valued building also there. Okay, building, we are the value of building is same, so we are not writing here. So after revaluing all the assets in our business, see the broker, I told you we are going to appoint a broker, right? It can be a CA person, chartered accountant also. Okay, so we appointed that one person, and during the time of revaluation, he found in our business there is an unrecorded asset. What is by unrecorded asset? It can be, see, any furniture or anything. Any one of the partner might be brought before, maybe 1 year before, in a free of cost. That is the reason it is not came in balance sheet, our present balance sheet. Maybe one chair is there in his home. Mr. A, he bought one chair to business, or any furniture or anything, whatever asset it may be. He just donated that particular chair or anything to our business. That is why that particular asset become an unrecorded asset. There will be some unrecorded liability also. Okay. So that particular asset should be recorded through revaluation account. What is the reason? If you are not recording that particular asset, what will happen? Obviously, that benefit will be going to new partner also. If you are not recording, it's not mandatory to record. If you want to get, if old partners want to get all the benefit of that particular unrecorded asset, then it should be recorded. Okay, it should be recorded. Okay, so I am just writing as a third adjustment. There is an unrecorded asset. There is an unrecorded asset of rupees, unrecorded asset of rupees 2,000 is to be recorded. I mean, that means we want to record that unrecorded asset, okay, through revaluation account. Okay, is to be recorded. Fourth one, there is an unrecorded liability also. Same way, sometime there might be some liabilities we didn't find, we forgot to record. So that is why it is not coming in our balance sheet, old balance sheet. So that also should be recorded. Okay. So obviously unrecorded liability, if you are recording, that will be in loss side. That means in debit side of revaluation, unrecorded asset, it will be in profit side, that is credit side of revaluation. Okay. So fourth one, unrecorded liability. Okay. Unrecorded liability of rupees 1,000 is to be recorded. Okay. Is to be recorded. Okay. Now fifth one, there is an adjustment. I am just including an adjustment so it will be easy to explain. I am just including an adjustment related with workman compensation fund. Okay, there is a claim on workman compensation fund. Rupees 5,000. What is meant by workman compensation fund? You already know what is my workman compensation fund. See, actually, this is actually a reserve, a fund which we kept for workman purpose. You know that sometime we'll be running factories and building related things. So obviously there will be some damages for workmen. So for compensating the damages, we just kept a fund that is called workman compensation fund. Okay. So what happened in this question, I am just adding, there is a claim on, actually it's a reserve. It should be distributed to partners in their profit sharing ratio through partners capital account. But there is a claim on workman compensation fund. So if there is any claim, that claim should be deducted, and that claim should not be given to the old partners. That claim should be deducted and we should record in new balance sheet. Okay, as a claim on workman compensation fund. Okay, so I just included workman compensation fund claim 5,000 rupees. Okay, now sixth adjustment I am going to include out of total creditors, out of total creditors, out of total creditors, out of total creditors, that means sundry creditors, out of total creditors, rupees 500. What is the total creditors here? 2,000 rupees, right? Total creditors 2,000. So out of total creditors, rupees 500 is not likely to be claimed. Is not likely to be claimed. Is not likely to be claimed. Okay, is not likely to be claimed. It's not likely to be claimed. And it means what? It's not likely to be claimed means what? So you know what is by sundry creditors? Our supplies only. Sundry creditors are our supplies only. Sometime, we are in the process of admitting a new partner. That is why we are finding all the new value of assets and liabilities. So we just call that our suppliers. We just call our suppliers, and one of the supplier told that, okay, you are in the process of admission. Okay, I will give you a discount of 500 rupees. That is called out of total sundry creditors. A person is not claiming 500 rupees. A person is not claiming 500 rupees. Okay, that means that is a profit to us. So we'll be writing in credit side of revaluation account. Okay, so now seventh one I am going to write. Seventh one, provision for doubtful debt. Provision for doubtful debt. Provision for doubtful debt. DD means doubtful debt. Okay, provision for doubtful debt. Provision for doubtful debt is to be increased to 4,000 rupees. Is to be increased to 4,000 rupees. 4,000 rupees. Okay, you already know what is by provision for doubtful debt. See, sundry debtors. Sundry debtors are our customers. They will be purchasing ice creams from our factory, and they will be telling they will be paying afterwards. They maybe after 1 month or 2 months. So we cannot believe complete sundry debtors will be coming back. Amount of sundry debtors will be coming back. We cannot believe. So for tackling this kind of situation, for avoiding this kind of situation, any loss in this sundry debtors, we will create a provision. Every year we will be creating a fixed amount of provision. Okay, fixed amount of provision. That last year it was 3,000 rupees. You can see that we already deducted from sundry debtors less provision for doubtful debt. Last year it was 3,000. This year it was increased to 4,000 rupees. That means only the difference 1,000. How much it is increasing? That already 3,000 is there in provision for doubtful debt account. So how much it increased? Only 1,000 is increased. That only will be writing in revaluation account. Okay, how much it is increasing? Okay, so if it is increasing, we'll be writing in debit side, that means loss side. If it is decreasing, means we'll be writing in credit side of revaluation account. Okay, now we want to prepare revaluation account, partners capital account, cash book, and balance sheet after reconstitution. Okay, balance sheet after reconstitution. Okay, so now the question is over. So you might be thinking, why I'm making my own question. See, actually now you understood what is the reason behind the question. Now you understood. I already explained you. I'm going to deal with an ice cream factory. So I draw a balance sheet of ice cream factory, and I just explain what are the possible asset will be coming in that balance sheet and what are the possible liabilities will be coming in that balance sheet. And I told you a new partner is coming, Mr. C is coming. Because of that, we are just taking all our asset to outside, and we just find what is the new value of the asset, and we wrote all the new values and everything. Now the question is formed. This is the way how question actually formed in CBSE. Okay, so now you understood what is the reason behind this question. Now it will be very easy. Now you can do your revaluation account, partners capital account, everything. It will be very easy. I already told you why we are going to make revaluation account. I told you now. I told you already. If there is any adjustment, if there is any difference in assets or liability in present value, in old value and present value, that difference only will be writing in revaluation. So why we create a revaluation account? If there is any decrease or decrease in increase or decrease in assets or liabilities, that decreased or increased amount only will be writing in revaluation account. Okay, so debit side is a particular amount. This is the revaluation account. I already format is there. And there is a trick for doing revaluation. Always you take credit side as profit side, profit side, and debit side as loss side. Okay, then it will be very easy. Okay, always take debit side as loss side, credit side as profit side. Now I am going to write what are the items, how we can write items in revaluation. It will be very easy. Now we can read one by one. First one is machinery was revalued at rupees 25,000. You know that the previous value of machinery is 20,000. You already know the previous value of machinery is 20,000, and now it become 25,000. It means 5,000 increased. So what is the profit? 5,000. So that we will be writing in profit side of revaluation account. It will be very easy. So we will be writing machinery here. Machinery 5,000. Machinery 5,000. And now we can go to the second one. Furniture was revalued at rupees 3,000. You already know what is the value of furniture, old value of furniture, that is 5,000 rupees. So there is a decrease in 2,000 rupees. So business is having a 2,000 loss. Okay, 2,000 loss. Okay, so that we can write in loss side. We can write furniture 2,000 in loss side. Furniture 2,000 in loss side. Okay, so now it will be very easy because you already know what is the reason behind this question, and now easily you can write all the debit and credit in revaluation account. Okay, so whatever profit is there you can write in credit side, whatever loss is there you can write in debit side. Okay, so two things over. And now unrecorded asset and unrecorded liability. There is an unrecorded asset of 2,000. I told you what is meant by unrecorded asset. So we already invited a broker, right? So during the time of admission, he found that there is a chair or something, any kind of an asset, which is not recorded in old balance sheet. Maybe the partners will be brought from his or her home, just a donation purpose. That means simply they bought without any benefit. So that is the reason you can see one asset in your business which is not recorded in old balance sheet. That should be recorded. What is the reason? Because I told you, if you are not recording that, that benefit will be going to the new partner also. If you are not recording, okay. If you are recording, that benefit will be going to the old partners only. Okay. So we are going to record that asset. Unrecorded asset we will be writing in profit side of revaluation account. Unrecorded asset. How much? Unrecorded asset, it is 2,000 rupees. Same way, there is an unrecorded liability of 1,000 rupees. So unrecorded liability we will be writing in loss side. Unrecorded liability 1,000 rupees we will be recording in debit side of revaluation account because it is a loss. Okay. Now, so two adjustment is over. So see, so the easy way of writing the answer for, see, whenever there is a question, you just read the question, what accounts we want to write. So see, actually you want to prepare what accounts you want to prepare. So you want to prepare a revaluation account, partners capital account, cash book and balance sheet. Okay, you want to prepare here revaluation account, partners capital account, cash book and balance sheet. So please draw all the account well in advance, then it will be very easy. So you don't want to waste your time. Please draw all the account well in advance. Okay, so you don't want to waste your time. Okay, so I already, you can see here, I already drawn here ABC, three partners, including new partner ABC. This is partners capital account. This is partners capital account. So it will be very easy. Partners capital account, and you can see here balance sheet of the new firm. This is liability. This is liability, amount, asset, amount. Okay. Sorry, this is cash account. Sorry, this is cash account. Okay, this is cash account. Sorry, this is cash account. Next one is balance sheet. Okay, next one is balance sheet. Here you can see liability, amount, asset, amount. I already prepared all the required boxes. So you all, because read the question and just draw maximum bigger one you can draw, no issues. You won't be, they won't be reducing. So what is the advantage of that? So you can write working note in last. So it will be very easy to find the answer for the examiner. Okay, you can write working note in last. So that is the advantage of that. Okay. So now where we stopped, okay. So there is a fun, we already recorded machinery, furniture, unrecorded liability and unrecorded asset. Okay. So you already know after the admission, last we are going to prepare a balance sheet. What things will be writing in balance sheet? The new value of the asset. The new value of the asset. Okay. So we already recorded machinery, furniture and everything, right? So we can directly, whenever you are recording in revaluation account itself, you can directly record in balance sheet also. So that particular transaction will be over. So we don't want to think again. So easily you can score good mark in exam. You finish that particular transaction at once itself. Suddenly you can finish, then that transaction completely you can leave, so you can work through the next transaction. Okay, so we already transferred machinery account 5,000 into profit save, so that means the new value of machinery become 25,000. Okay, so you can write in balance sheet, new balance sheet, machinery as 25,000. You can write machinery 25,000, so no tension. So that transaction full over 25,000. Okay, so now what happened for furniture? It reduced to 2,000. So the new value of furniture is 3,000. Okay, so you can write furniture value here 3,000. Furniture, new value is 3,000. And there is an unrecorded asset. It should be recorded. I told you now you are going to record that asset, so obviously that asset will be coming in new balance sheet. Why? Because you recorded through revaluation account. Okay, unrecorded asset of 2,000 and there is a unrecorded liability of 1,000. Unrecorded liability of 1,000 that you can record here. Unrecorded liability of 1,000. So no tension. Okay, that three transaction completely over, so you don't want to look in that three transaction. Okay, now just we can check unrecorded liability, unrecorded asset we already wrote, and claim on workman compensation fund. Claim on workman compensation fund, rupees 5,000. Another transaction, there is a claim on workman compensation fund, rupees 5,000. So before explaining how to deal with claim on workman compensation fund, I want to tell you one thing. See, we already recorded all the assets and liabilities through revaluation account. If there is an increase in assets and if there is a decrease in asset or appreciation or depreciation in asset, we will be recording in revaluation account, even liabilities also. But you can see that we are not able to record all the asset or liabilities through revaluation account. What is the reason? What is the reason? There are some assets or some liabilities. For that liabilities or asset, there won't be any changes in second-hand market. For example, general reserve, workman compensation fund. This all are fund. Already that money is there. Fixed money is there. We already kept that money for some other purposes. But what is the difference between an asset and a reserve? What is the difference? Asset, anytime the values will be changing, and always that will be there in your business for a long time. That will be there in your business. But apart from that, reserves, any reserves or fund is there in your business, that will be in the form of cash or whatever it may be. It will be it's in the form of reserve. We'll be keeping for some other purpose. That there won't be any changes in future. If you have a reserve of 10,000 cash, then that 10,000 only will be there. So these kind of things we cannot adjust through revaluation account. These kind of things will be directly adjusting through partners capital account. That is called accumulated profit or losses. There are some item some item which cannot be adjusted in revaluation account. Why? Because in revaluation account we can adjust only assets and liabilities, which is having some changes in second hand market, or some changes in such changes will be happen, some appreciation, depreciation, or some changes will be happen. Obviously sundry creditors also having some changes. Okay, so other than that, some liabilities you can see, or some reserves you can see in balance sheet, like general reserve, workman compensation fund, and investment fluctuation fund, profit and loss account, goodwill. These 5 item will not have any changes. If these items are there in balance sheet, directly you can record in partners capital account through credit side or debit side. Okay, if any items are coming among these 5 item, what are the 5 item coming under accumulated profit and losses? First one is goodwill, second one is general reserve, workman compensation fund, investment fluctuation fund, and profit and loss account. Mainly these are the 5 items. There are many other items also, but mainly in plus 2 you want to study 5 item: workman compensation fund, general reserve, profit and loss account, goodwill, investment fluctuation fund. 5 item. If these 5 items are there in balance sheet, you want to directly transfer to the partners capital account, debit or credit side. Okay, if the items are coming in liability side, then you can transfer to credit side. If these among this any item it is coming in asset side, you can directly transfer to credit side, sorry, debit side, if it is coming in asset side. Okay, why? What is the reason why we cannot adjust through revaluation? Because no changes. General reserve, it's a amount only, there is no changes in general reserve. So these kind of item, mainly this 5 item, we cannot adjust through revaluation. That is why we are directly giving to partners capital account. You know that what is a property of partners capital account? What is the property of partners capital account? If anything is increasing, that will be coming to the credit side of partners capital account. If anything is decreasing to the partners, it will be coming to the debit side of partners capital account. So that is a property of partners capital account. Okay, so now we can adjust workman compensation fund. You already know what is meant by workman compensation fund. It's an accumulated profit and losses. We'll be distributing that complete amount to the partners capital account. Okay, we'll be distributing that complete amount to the partners capital account. We'll be distributing that complete amount to the partners capital account. But there is a claim on workman compensation fund of 5,000 rupees. Now I think you can understand easily. There is a claim of workman compensation fund 5,000 rupees. If there is a claim in workman compensation fund, that amount should be deducted, and balance amount. What is the total of workman compensation fund? You already know the total of workman compensation fund is 20,000. You already know. I'm just highlighting that. 20,000 is the total of workman compensation fund. So from that 20,000, you can deduct 5,000. The remaining 15,000 on 5,000, you can distribute to the partners capital account in their profit sharing ratio. Okay, in their profit sharing ratio. Okay, so now we can adjust. We can just do third adjustment. So you already drawn partners capital account, right? So each and every adjustment we can do together only. We don't, because if you draw all the accounts together, then it will be easy. Okay, so you already know partners capital account will be, first you will be starting with balance breakdown. So what is the balance of partners capital account? Balance breakdown will be, you already know in balance sheet, the balance breakdown of balance A and B is 25,000 and 20,000. Okay, 25,000 and 20,000, that you can write first. 25,000, 20,000. Okay, 20,000. And after that we want to write revaluation profit. So we didn't find revaluation profit, so we can write what are the accumulated profit and losses in balance sheet, that we can directly write to partners capital account in their profit sharing ratio. Okay, I told you there are some item which cannot be adjusted through revaluation account, that is called accumulated profit and losses. There are 5 items. Okay, so we can find what are the 5 items in balance sheet. Okay, you can see general reserve 5,000, workman compensation fund is there, and also in asset side, goodwill is there. Yeah, only goodwill is there. Okay. So how we can distribute? I told you whatever coming in liability side, that can be going to credit side of partners capital account. So general reserve 5,000 is there. So how we can distribute? In the ratio of 3:2. Their profit sharing ratio is 3:2. So we'll be distributing in the ratio of 3:2. Okay. So general reserve first we can distribute, that is 5,000 general reserve is 5,000. So we can distribute general reserve 5,000. So 3:2 ratio means 5,000 into, for A it will be 5,000 into 3:2 means 3/5. Then you will be getting 3,000. Same way you can calculate for B also. So for A it will be 3,000. For B it will be 2,000. Okay, it will be 2,000. General reserve we distributed. Now next thing, workman compensation fund 20,000. I told you there is a claim on workman compensation fund 5,000 rupees. So you cannot distribute directly complete amount to the partners capital account. Why? Because complete amount we cannot give to partners capital account. Partners, what is the reason? Because 5,000 there is a claim. We want to give to the workers. Maybe some accident happened. That is why one of the worker claimed 5,000. So we will never give in sudden that 5,000. We will be keeping in balance sheet only. After inspection and everything, if we found that that particular case is genuine, then only we will be transferring that amount to the partners. I mean that particular workman. Okay. Till that, we will be keeping that amount as a liability. Okay. So from 20,000, you know that 20,000 is the workman compensation fund. From 20,000, we will be deducting that 5,000. The remaining 15,000 only transferring to partners capital account. So workman compensation fund 15,000 will be distributing the profit sharing ratio. It will be 9,000 and 6,000. You can calculate. Okay, 9,000 and 6,000. You know how to calculate. 15,000 into 3/2 for A, and 15,000 into 3/5 for A, and 50,000 into 2/5 for B. Then you will be getting 9,000 and 6,000. So we distributed workman compensation fund. Okay, we distributed workman compensation fund. Okay, and the remaining 5,000 we can transfer to the balance sheet. We can transfer to the balance sheet. Claim on workman compensation fund. Claim on workman compensation fund 5,000 will be keeping in balance sheet. Why? Because till now we didn't pay that amount. What is the reason? We want to research whether that particular case is genuine or not. If we found that it is genuine, we can transfer to that particular worker. Till that it will be showing in liability side only as a claim on workman compensation fund 5,000 rupees. Okay, I hope you understood. Next thing. Out of total creditors, rupees 500 is not likely to be claimed. Out of total creditors, I already told you, creditors, if there is any discount in creditors, that means 500 is not likely to be claimed. Means what? They are giving a discount of 500. So obviously that will be writing in profit side. We will be writing sundry creditors, that 500 in profit side. Okay. So I hope you understood how this 500 and everything came. Okay, 500 came. I hope you understood, because it's a profit, because sundry creditors are not claiming. So liability is decreasing. Obviously, if liability is decreasing, means it's a profit for our business. So that also you can write there. Okay. So now another thing. What is the next adjustment? Provision for doubtful debt is to be increased to 4,000 rupees. So there are many adjustments you can see. Provision for doubtful debt. Only one case it is given here. Many cases you can see in provision for doubtful debt. One case is given. So provision is to be increased to 4,000 rupees. You already know the provision, already 3,000 provision is there in balance sheet. We already deducted 3,000 rupees. But now it is increased to 4,000 rupees. That means 1,000 rupees extra. That is 1,000 rupees extra. Okay, already we have, last year we have 3,000 rupees. Now this year we are going to increase to the 4,000 rupees. So that extra 1,000 rupees will be taken from revaluation account loss side. Loss side. Okay. So we will be writing provision for doubtful debt. Only that extra 1,000 rupees only will be writing in low side of revaluation account. Only that extra 1,000 rupees only will be writing low side of revaluation. So what are the other possible adjustment in provision for doubtful debt? What are the other possible adjustment? Sometime you can see the provision will be decreased to 2,000 rupees. In this case, what will you do? If provision will be decreased to 2,000 rupees. If this case, we already have 3,000 in revaluation account, sorry, in balance sheet 3,000, we deducted 3,000. Last year we already had 3,000. That we are going to decrease into 2,000. That means we are taking 2,000 back to our business. So it is a profit for us. So that only we are taking 1,000 back to our business. That is, that 1,000 will be profit for us. That will be writing in credit side of revaluation account. That will be recording in credit side of revaluation account. Why? Because we are taking back 1,000 rupees. Why? Because we are planning to keep 2,000 rupees provision for doubtful debt this year. So obviously last year we kept 3,000. That extra 1,000 will be taking back from last year. Okay. So that we will be writing in profit side of revaluation account. That is credit side of revaluation account. Okay. So this kind of many adjustment you can see. Even in workman compensation also you can see. So we already have 20,000 workman compensation fund. If there is a claim of 5,000, you already know we will be deducting that 5,000 and rest only we will be transferring. If there is a claim of 22,000, we already have only 20,000 in workman compensation, but the claim become 22,000. So that extra 20,000 completely we can take from our reserve because we already had 20,000. That extra 2,000 from where we will take? That extra 2,000 will be taking from revaluation account, low side of revaluation account. Okay, low side of revaluation account. Okay. Okay. So now all the adjustments are over. Revaluation account is over. So now we can balance revaluation account. So the balance carried on will be coming in credit side because, sorry, debit side because credit side is more. So for A, it will be 2,100. So the total balance is 3,500. So after calculating, we'll be getting 3,500. So for A, it will be 2,100 and for B, it will be 1,400. Okay, we will be distributing that balance of 3,500 in their profit share, old profit share ratio, that is 3:2. Okay, so now revaluation is over. Now we are going to partners capital account. We can write here revaluation profit because it is a profit. It came in debit side, balance came in debit side, so it's a profit. So that profit will be given to the old partners only, not to the new partner. Why? Because what is the reason of making revaluation? Because we want to find how much amount we want to give to the old partners because of admission of C, I mean new partner. Okay, what are the difference in market came, that all will be giving to old partners in their profit share ratio. So revaluation profit we can write here. Evaluation profit we can write here. Evaluation profit we can write here. What is the revaluation profit? For A it is 2,100. For B it is 1,400. Okay, so 2,100, 1,400 we can write as revaluation profit. Okay, so we already recorded revaluation. We recorded general reserve. Almost everything we recorded. Now what else we want to do? In third step, we can see we can record in third step, we can record the goodwill bought by the new partner and the cash bought by the new partner as a form of capital. Before that, we can check whether all accumulated profit and losses are recorded or not. Okay, so we recorded general reserve, we already recorded general reserve. Okay, workman compensation fund recorded. I think goodwill not recorded. Goodwill given in balance sheet asset side is not recorded. That should be going to the debit side of revaluation account. Sorry, partners capital account. I already told you if anything came in asset side, that will be going to the debit side of partners capital account. Okay, so I'll be writing in debit side of partners capital account goodwill. So goodwill will be 4,000 rupees. Good value of goodwill is 4,000 rupees. I think it is 4,000 rupees. Yeah, 4,000 rupees. So that you can distribute in old ratio, that is 3:2. So it will be 2,400 for A and 1,600 for B. It will be distributed only to the old partners in their old profit sharing ratio. Okay, so we already distributed. Now, next thing, the goodwill bought by the new partner in the form of cash only. The goodwill bought by the new partner. Why? I already told you what is the reason for goodwill. Because the partner is coming today onwards. Today only partner is joined. So till today, the old partners are putting all the effort to bring the business up in a profit way. So definitely the new partner want to give a goodwill to the old partners. So here 5,000 is the goodwill bought by the new partner. So obviously that goodwill will be given to old partners in sacrificing ratio, not in old ratio. In sacrificing ratio, see if no information is given regarding how much A and B is sacrificing or how much A and B is giving to the new partner. If no information is given, then directly you can use, then sacrificing ratio and old ratio will be equal. Okay, so we can take 3:2 as sacrificing ratio. In same ratio only they sacrifice it. So if you are writing in 3:2, it will be 3,000 and 2,000 to old partners. So goodwill be distributed. Okay, so sometime in goodwill case you can see many kind of adjustment in goodwill case. Sometime the goodwill will be bought by the new partner in the form of a kind, maybe in the form of an asset. If that is the case, what you can do? What you can do? You can simply write, instead of cash, you can write name of that asset. If furniture means, you can write name of that furniture and distribute to A and B, no issue. Okay, but in this question they bought in the form of cash. The new partner bought in the form of cash, so obviously cash will be there. So in cash account, that amount will be increasing. Okay, so goodwill bought by the new partners. For A, how much they given? A as capital. So for A they are given 3,000 rupees. For B they are given 2,000 rupees. Total 5,000 goodwill given to A and B in the form of cash. That is why we are writing debit side of cash account. So if any increase in inflow in cash, that means increase in cash, we will be writing in debit side. If any decrease in cash, that means any payment happen, we will be writing in credit side of cash book. So we can write balance of cash. What is the balance of cash? In old balance sheet, it is given balance of cash is 20,000 rupees. Okay, so balance of cash is 20,000 rupees. That also you want to write in cash book. 20,000 rupees also you want to write in cash book. And after that, the cash bought by the the goodwill bought by the new partner will be distributed to A and B in the ratio of 3:2. So 3,000 will be going to A and 2,000 will be going to B. Okay, now after that, so that goodwill transaction completed. So you don't want to look at goodwill transactions. Next thing, in partners capital account, that is cash bought by the capital bought by the new partner. That also you want to record. Okay, so that also in the form of cash. So you can, if you want, you can write in bracket for your deep understanding, capital bought by new partner. Capital bought by new partner. Okay, what is the capital? What is the capital bought by the new partner? That is 20,000. Okay, 20,000 you can write here. 20,000 you can write here. And the same 20,000 you can record in cash book also. I told you capital bought in the form of cash, so cash book will be increasing. Okay, so C is capital, you can write here C is capital. C is capital, 20,000 also you can write. C is capital, 20,000 also you can write. I think all the cash transactions are over. Now you can write balance of cash. Balance carried on. It is 45,000. Now we got what is the new balance of cash book. Because all the cash transactions are over. Only mainly in admission, mainly two cash transactions will be there. First one at the time of admission of the new partner, the goodwill bought by the new partner, and cash bought by the capital bought by the new partner. Other than that, there is a possibility of during the time of capital adjustment. Okay, so here there is no capital adjustment right now. but we will add capital adjustment in this same question itself. But now time being, the cash transactions are over, so the new cash balance is 45,000, so that we can write in new balance sheet, that we can show in new balance sheet. So cash, how much? Cash, new balance, new value of cash is 45,000, so we recorded in asset side of cash book, so that is also over. Okay, now another thing you can see, no, we already distributed everything. Now we can find the balance. What is the balance of partners capital account? Balance carried on. Okay, balance carried on for A. How we can find the balance? I'm going to find balance of A. So you add all the credit side value, 25,000 plus 2,100, 3,000 plus 9,000 plus 3,000. Add all this and minus anything is there in debit side. Here goodwill is there in debit side, 2,400. Okay, so after deducting that, you will be getting 39,700. 39,700 is the balance for A, and for B it will be 29,800. For C it will be 20,000. Nothing is there in debit side, so total 20,000. So this is the balance of partners capital account. This is the balance of partners capital account. Okay, and many students are asking, sir, why there is two goodwill in question admission? Many students are having that confusion, why there is two goodwill. So one thing I want to say you, if the goodwill is there in balance sheet asset side and goodwill bought by the new partner, there is no connection between them. Okay, if goodwill is there in balance sheet, directly distribute to debit side of partners capital account, nothing else. You are not going to do anything with that goodwill. But goodwill bought by the new partner, for that only all the adjustment will be coming, that you will be directly transferring to partners capital account, credit side. Okay, credit side. There are different conditions in goodwill. Sometimes the goodwill will be bought by the new partner in the form of kind, I told you, maybe in the form of an asset, or maybe the partners won't be bringing any goodwill. In that case, what we'll do, we'll be debiting that amount into new partner account and we'll be giving to the old partners in their sacrificing ratio. Okay, so anyway, goodwill should be given to the older partners. If that particular person is new partner is not bringing, means we will be debiting into his capital account, that particular person capital account, and will be giving to the older partners in their sacrificing ratio. Okay, so we got balance. Now we'll be completing the balance sheet. So liability side, we recorded almost everything, but we forgot to record sundry debtors. So what is the new value of sundry debtors? There is a 500 not likely to be claimed, so that will be deducted from sundry debtors. So total sundry debtors is 2,000 in old balance sheet, you can see. So 500 is not likely to be claimed, so 1,500 is the new value of sundry debtor. 1,500 new value of sundry debtor is 1,500, and we recorded unrecorded liability, claim on workman compensation, sundry debtors, everything we recorded. Cash also we recorded. Building, one more asset is there, that is building. Nothing happened, no appreciation, no depreciation, so no changes. So same value you can write. Building 13,000 you can write in balance sheet. Building 30,000 you can write in balance sheet. Building, same amount you can write in balance sheet because nothing happened, no appreciation, no depreciation. Machinery we already wrote. Furniture also we already did. We already wrote. Unrecorded asset also we already wrote. Now sundry debtors. Sundry debtors, 30,000 is the value of sundry debtors. Less, what is the new provision? Provision for doubtful debt. It become 4,000, right? Before it was 3,000, now it become 4,000. So the value will be 9,000. Inside value will be 9,000. We will be deducting 4,000. The inside value will be 9,000. I hope everything we recorded. So the total value balance in balance sheet will be 97,000. I already calculated here, so it is 97,000. Balance sheet become tally. So this is the normal question. So how I discussed it? I discussed what is the reason behind the question, how questions are coming, and why what is the reason of revaluation, and how we can record in partners capital account and in balance sheet. So the easiest way of doing, first you draw all the account first, whatever account you want to draw in question, it will be given in question, right? First you draw that account, complete account. After that only you can post all the amount into the account, post all the amount into the accounts. Okay, so now same question, in same question only, I am planning to include capital adjustment to same question, so it will be easy. Now we completed in a normal way. So to name same question, I am planning to include capital adjustment. Okay, so what are the two capital adjustment? What are the two capital adjustment? Okay, what are the two capital adjustment, possible two capital adjustment in partners capital account? I'm admission of the partner. Okay, first one, sorry, first one is old partners are adjusting according to new partner capital. Old partners are adjusting. Old partners are adjusting. Old partners are adjusting according to new partner capital. New partner capital. Old partners are adjusting according to new partner capital. Okay, old partners are adjusting according to new partners capital account. Okay, so many students are asking me, sir, we are not able to find what kind of capital adjustment came in question, because it is asking in different way. So we are not able to trace out what adjustment is coming. See, basically for this first adjustment, that means old partners are adjusting according to new partners capital account. How you can understand this is first capital adjustment? It is very easy. In question it will be given the new partner will be bringing some amount of capital. Okay, some amount of capital will be there. That means the new partner will be bringing some amount of capital. In this question you already know the new partner will be bringing 20,000 as capital. We already wrote here, right? 20,000 as new capital. We already know the new partner is bringing 20,000 as his capital. 20,000 as capital. So already the partner bought the capital. So we can conclude that according to the new partner, old partners are going to adjust according to new partner. Okay. So if this is the first case, if this is the capital adjustment, in first step, you want to find new profit sharing ratio. Okay. So the new partner is coming for 1/4 share, right? New partner is coming 1/4 share. Old partners are sharing in the ratio of 3:2. Old partners are sharing in the ratio of 3:2. In the ratio of 3:2. Okay. So the new partner C is admitted for 1/4 share, and the old partner is already sharing 3:2 ratio. Okay. We want to find new profit sharing ratio. So now information is given. So how you can find new profit? So let total share is equal to 1 minus 1/4. So you will be getting the balance share is 3/4. You'll be getting balance share is 3/4. So how to find new share? New share is equal to 3/4 into 3/5. 3/4 into 3/5. How you got 3/5? So they are sharing the ratio of 3:2. So 3/5 for A. So we will be getting 9/20. So new share of A is 9/20. For B, it will be 3/4. Same 3/4 into 2/5. Okay, it will be 6/20. Okay, so for C already you know 1/4 is the share. So we want to make denominator equal. So both side you can multiply with 5. So it will become 5/20. So the new profit sharing ratio become 9:6:5. New profit sharing ratio will be 9:6:5. Okay. So the new profit sharing ratio is 9:6:5. Okay. Now this is the first step you want to do. First for capital adjustment, first you find the new profit sharing ratio. Second step, by using the new partner capital account, find the total capital of the firm. Okay. So new partner is coming for 1/4 share. And what is his capital? 20,000, right? His capital is 20,000. Profit sharing ratio is 1/4. So he is coming for 20,000 capital. He is coming with 20,000 capital and he is having 1/4 share with him. So how you can find total capital of the firm? Total capital of the firm. It's very easy. 20,000 into reciprocal of is proficient ratio. That is 4 by 1. Then you will be getting 80,000. 80,000. This is the total capital of the firm. Easy. Third step, this total capital of the firm you can distribute to all the partners in their proficient ratio. New proficient ratio. Okay, all the partners in their new proficient ratio. So for A, how much it will be getting? 80,000 into, you already know the new proficient ratio is 9:6:5. New proficient ratio is 9:6:5. So for A, it will be 9 by 20. Then it will be 9 by 20, it will be 36,000. For A, it will be 36,000. For B, it will be same 80,000 into 6 by 20. 6 by 20, it will be 24,000. It will be 24,000. For C, obviously 20,000. No changes. This is the new capital of all the partners. Okay, so we got new capital of all the partners. Okay, so we got 36,000, 24,000 and 20,000 is the new capital of all the partners. Now, what do we want to do in partners capital account? Just write that new capital which we found by using new proficient ratio. Just write here balance carried on. The new capital, that is for A it is 36,000. For A it is 36,000. For B it is 24,000. For C it is 20,000. Just write that. Okay, just write that because that is the new capital of all the partners. Because of capital adjustment, now we got the new capital balance, that is 36,000, 24,000, 20,000. Okay, so what is their real capital which we found after all the adjustment? That is 39,700 for A, 29,800 for B, 20,000 for C. We already know that. Now, after this capital adjustment, these values won't be here. These value, old balance carried on won't be here. That for my reference, I am just writing that old values here in outside for my reference. Okay, so for A it is 39,700. For B it is 29,800. For C it is 20,000. Now I am erasing this. Okay, old balance carried on, I am just erasing this. Okay, so obviously there will be a difference. There will be a balancing figure in partners capital. Why? Because we wrote new balance carried on, right? 36,000, 24,000, 20,000 by using capital adjustment. Now this is the new balance. So obviously there will be a balancing figure that we can find. We can add all the debits, credit side value, that's 25,000 plus 2,100 plus 3,000 plus 9,000 plus 3,000 minus 2,400 for A minus 36,000 balance carried on. Then you will be getting a value that is called balancing figure. Okay, that is called balancing figure. So that balancing figure, you can write here. After my calculation, I got 3,700 for A, balancing figure 3,700 and 5,800 for B. 5,800 for B. This is the balancing figure. For C, 0. You already know. C already bought the capital. So because of that capital adjustment, there is a balancing figure 3,700 and 5,800. This can be withdrawn by the partner. Why? Because this is excess. This amount is excess. Because we already know what is the previous capital of A. That is 39,700. Now after capital adjustment, it becomes 36,000. That means there is an excess of 3,700. The difference between old capital and new capital, there is an excess of 3,700. Okay, either it can withdraw by A, and for B it is 5,800. Either it can withdraw by A and B through cash account. So if they are planning to withdraw, then it will be coming in cash book, credit side. A's capital 3,700 will be coming in credit side. B's capital 3,700 will be coming in credit side. Okay, if they are planning to withdraw. Sometime in question you can see, if they are planning to withdraw, then here it will be coming as cash account. Here we are writing cash account. Then that value 3,700 will be going to 3,700 and 5,800 will be going to the credit side of cash account because they are withdrawing from the business. So definitely it will be payment. So it will be coming in credit side of cash book. But sometime in question you can see it should be adjusted through current account. It should be adjusted through current account. Then what we can write here? Instead of writing cash, we can write here current account. We can write here current account. If you are writing current account here, then what is the purpose of current account? Current account means company is not having that much money to pay to the partners. So what we'll do? We will just write in new balance sheet. That complete amount we will write in new balance sheet current account as a current account. We'll be writing that that amount in new balance sheet current account. Okay, we'll be writing in the name of current account. We'll be writing A and B. That amount we'll be writing as in current account. Okay, what is the amount? 3,700 and 5,800. 3,700 and 5,800 will be writing in liability side current account. Okay, so this is the first capital adjustment. Okay, first capital adjustment. Okay, sometime 3 mark question also will be coming. Okay, so now second capital adjustment. Now we are going to I'm going to discuss what is second capital adjustment. Okay, what is second capital adjustment? I'm going to discuss what is second capital adjustment. That is also very easy. Please listen carefully. For that also, step 1. See, actually the name of second capital adjustment. All partners are adjusting according to the capital worth partners agreed. Okay, all partners, second capital adjustment I am going to discuss. All partners are adjusting. All partners are adjusting according to capital were agreed upon. It means what? See, actually, second capital adjustment. In this case, the new partner won't be bringing any capital. We want to find what is the capital for the new partner. Okay, so all partners will be agreed with a fixed amount of capital. They will be deciding some amount that will be given in question, maybe 1 lakh, 2 lakh, whatever it may be. They will be fixing a particular amount as a capital, and that capital will be distributed to all the partners in their new profit sharing ratio, and whatever excess or less that they can withdraw or bring back to the business. Okay, if more is there, they can withdraw. If less is there, they want to bring back. Same like previous one, but here what happened? A fixed amount they will be agreed upon. A fixed amount of capital will be given in question. For example, 1 lakh rupees. It can be 2 lakh rupees. It will be given in question. Okay, so we can consider in second capital adjustment, we can consider 1 lakh rupees as fixed amount. Okay, so how to calculate? We fixed the capital as 1 lakh rupees. Total capital of the firm we fixed as 1 lakh rupees. Total capital of the firm. Okay, so first step number 1. Same way you want to find new profit sharing ratio. We already find that is 9:6:5. New profit sharing ratio of all the partners. Second step number 2. This agreed capital 1 lakh rupees, agreed capital should be distributed to all partners in their new profit sharing ratio. Same way what we did. So for A will be getting 1 lakh into 9/20. A will be getting 45,000. Same way B will be getting. We will be getting how much? We will be getting 30,000. C will be getting. Same way you can do. C will be getting 25,000. This is the new capital of A, B and C. So now how to do capital adjustment? Easy. Same way you can do. Same way what we did in previous way. Change the balance, carry down again. Change the balance, carry down. This also we can erase because this is under capital adjustment. Change the balance, carry down again to new capital balance. What is the new capital balance? 45,000, 30,000, 25,000. 45,000, 30,000, 25,000. So we can write here 45,000. You can write here 45,000, 30,000, and 25,000. The new partner want to bring 25,000. Okay, 25,000. Now again, as I told you, here there will be a balancing figure. There will be a balancing figure. That you can either write in current account. If current account means, you can, if it is in debit side it is coming, means write liability side current account in new balance sheet, or you can write in cash book also. Okay, we already discussed it. Cash book means debit side, if it is coming, you can write in credit side of cash book, or else if it is coming in balancing figure is coming in credit side of partners capital account, then you can write in debit side of cash book. If it is current account means credit side of balance sheet. Okay, so here there is a balancing figure of balancing figure is coming credit side. So we can write here current account. We can do with current account. So balancing figure is 5,300, 200, and 25,000 for C. New partner want to bring 25,000, and the other partners, A and B, old partners, they want to bring 5,300 for A. A want to bring 5,300, B want to bring 200. If they are bringing in cash at the moment, then we'll be writing cash account here, not current account. Then we'll be writing debit side that amount. Okay, in debit side that amount will be coming in debit side cash book. Okay, if they are writing through current account, then what we'll do? We'll write in balance sheet asset side. That current account, same like what we did before. Okay, here I forgot to write liability side new capital of the partner, so that also you can record for A, B, and C. It will be 39,700 as per the first without any capitalization. Okay, so for B it is 29,800, C it is 20,000. This balance for first question. Okay, without any capitalization, I forgot to write. So total 89,500 will be coming. So I hope all of you understood what are the capital adjustment, how to deal with capital adjustment, and all the procedure in admission of partner. This is the 90% of admission of partner. Still there are some adjustment and things are coming, but at least if you know what I discussed today, you are able to get 90% in partner's capital account, minimum 90%. You want to do journal entry, you want to study how to do journal entry. It is very easy. I will just show you one example how to do journal entry for revaluation. See, I am just taking revaluation account here. See, here you can see first we will do journal entry for machinery account. It's very easy. Machinery is coming in credit side. What is the heading of this account? That is revaluation account. Machinery is coming in credit side. How to make journal entry for machinery? It's very easy. Whatever things credited in revaluation account, debit it. So machinery is credited, right? So debit it. So machinery account letter to name of that account, that is revaluation account. Revaluation account, that is 5,000. Debit 5,000, machinery account, credit revaluation account 5,000. This is the journal entry for revaluation. Okay, same way you can do everything for unrecorded asset. Obviously, you know, unrecorded asset to revaluation because it is credited. Sundry creditors, it is sundry creditors accounted to revaluation. And in debit side, furniture is there. Whatever debited, credited, just opposite. Do everything opposite. Okay, so the journal entry will be revaluation accounted to furniture account, revaluation accounted to unrecorded liability, revaluation accounted to provision for doubtful debt. This is the way how you want to do journal entry. Okay, now how you can do journal entry for a partner's capital account? That is also same method you can use. Whatever things are credited, debited. So general reserve you can see here, general reserve it is credited, so debited. So how we can write one example I can give you. So how we can debit it? So general reserve total it is 5,000 to A's capital to B's capital. Okay, to A's capital, B's. So whatever credited, debited. So general reserve is credited, general reserve is credited, general reserve is credited. Okay, debited. So general reserve account 5,000, and opposite side, credit side, you can write the affected account, that is A's capital, B's capital. So 3,000, 2,000. This is the way of passing journal entry. So this is the only way of passing journal entry. If you are studying this way, then it will be easy. So many 3-mark question will be coming related with journal entry. So if you know the long answer question, essay question, that means long answer question, then it is very easy to pass any kind of journal entry, any kind of question. So practice, whenever you are practicing any question, practice journal entry also. Then it will be easy to do any kind of journal entry in questions. A 3 mark question. Okay. So in big long answer question, a part will be taken and given as 3 mark question. And for that particular question only, you want to do journal entry. So it will be easy if you are doing long answer question, and if you are practicing previous year question paper 5 to 10 question paper, then surely 95% you can easily score in accountancy. Okay. I hope all you enjoyed this class. I hope all you understood. Thank you. Have a nice day. All the best for your exam. I'm always praying for you. Inshallah, you will get good mark. Hope you all will do best. Okay. Thank you. Have a nice day.